Good morning, my name's Tom Elliott and this is my market report on Thursday. Well, the ASX is actually having a pretty good week. Now, there's been mixed leads from Wall Street, but it seems our market, which has had a pretty strong correction over the past couple of weeks, down almost 7% at one stage, is now recovering some lost ground. Shares today up 1.2% at 11:30 a.m. Now, corporate activity is starting to drive activity overall in the market. Now, firstly, last week we saw that Foster's and the now named Treasury Wine Estates have successfully de-merged. And would you believe it, this morning, Constellation Wines, one of the biggest wine companies in the US, has said it would be interested in acquiring part or all of Treasury should it be for sale. Well, I can tell you, in the world of takeover, something is always for sale if someone's prepared to bid the right price. GrainCorp shares have also been very strong. The company has apparently appointed advisors just in case someone should make a bid for it. The stock is up from around $7.50 just a few weeks ago to as high as $8.60 this morning. So clearly something could be going on there. Of course, the recent turnaround in Australian weather, that is from drought to rain, means that agricultural stocks, or what there are left of them, should do well in the next year or so. Foxtel also, not a listed company by itself, although you can buy a share in it via the listed investment company Consolidated Media, but it is reputed to be about to launch a bid for Austar. Of course, Austar is the regional pay TV provider here in Australia. I don't think the ACCC would have a problem with this one. Austar shares have risen from a low of around $1.15 to just over $1.30 in the past few days on expectations of a bid that could come in between $1.50 and $1.60 per share. And Fairfax Media, which of course I do quite a bit of work for, announced a day or so ago that it was going to finally sell its radio assets. Now, I bought these assets around 5 years ago, part of the Southern Cross Broadcasting takeover. The assets include stations like 3AW and Magic 1278 in Melbourne, 2UE in Sydney, 6PR in Perth, 4BC in Brisbane. There's never been a very good mix between the primarily talkback radio assets that Southern Cross always had, and newspapers like The Age and the Sydney Morning Herald. No real synergies, as management consultants like to put it. Anyway, new Fairfax CEO Greg Highwood has decided he will put the radio assets up for sale. The reputed asking price is north of $250 million. Now, whether Fairfax will get that for these assets remains to be seen. The market for media assets is not nearly as strong as it was just a few months ago. Turning back to the US at the moment, now the $8 is still quite strong, buying 106.5 US dollars, but I think the US dollar is potentially due for a turnaround. The Federal Reserve indicated overnight that when the current round of quantitative easing, or money printing as most people should call it, it's the second round, so it's called QE2, that comes to a close in June, just next month. And they've indicated there won't be a third round, that is, unless the US economy falls back into a giant hole again. Now, of course, the US economy is still in a bit of a hole. I mean, unemployment is just under 9%, which isn't good. If the Federal Reserve stops printing money, I reckon we'll see the US dollar begin to rebound. So, as always, as I've been saying for the past few months, make the most of the strong $8 while you can. If you're planning to travel, organise it now. If you want to buy stuff from overseas, do it ASAP. And finally, the big four banks, they're up this morning, but some people might consider that surprising. Overnight, Moody's, one of the biggest world credit ratings agencies, decided to come out and downgrade the long-term debt of Westpac, Commonwealth, NAB and the ANZ. Now, you might think this is surprising because they are amongst the strongest banks in the world. They emerged from the global financial crisis in rude health. However, one Achilles heel that the big four Australian banks have is that they are very reliant on overseas wholesale funding to meet their loan book requirements. Deposits in Australia and local debt only account for about 60% of our bank's lending. As a result, 40% has to be borrowed overseas. Should the overseas credit markets freeze up again, as they did during the global financial crisis 2.5 years ago, well, Moody's is worried that would hamper the activities of the big four banks. Still, their credit rating is robust, down to AA2 from AA1. That's still better than most other banks around the world.